Department of Justice is considering breaking up Google after winning an antitrust case against the search giant just last week. A hearing is set for early September. Deirdre Bosa is here on the risks to Google and to investors in today's TechCheck. And Deirdre, I'm also curious with this timeline how the appeals process and so forth would affect anything that might happen here.
That will be a key part of it, which is why we shouldn't take the idea of a breakup or something less than that too seriously right now, because Google is going to appeal this, and this could take years in the making. But as we saw with Microsoft in the late 90s and early 2000s, even if you don't actually get a breakup, it can divert resources, talent, money, capital towards fighting these antitrust battles and make a company miss out on innovation that led to, a lost decade at Microsoft. So that is the worry here for Google as well. But the idea of a breakup has been raised that the DOJ is going to ask the judge to consider. And the street has a few different ways of looking at this. Unlocking value is a phrase that has sort of become popular in recent years as these mega caps collect more business units, especially higher margin ones like cloud computing or advertising. The idea that maybe if you do split it up, that could unlock value. And actually, Jefferies this morning doing its own analysis, saying that the market is seemingly assigning no value to Google's cloud and hardware businesses. So that's the short term. But in the long term, breaking up Google would have really important implications for the AI race, where integration, the ecosystem is absolutely critical. The more data, the better. The more integration, the better. And that was really on display at Google's event yesterday in Mountain View when they talked about the tech stack and integration and the idea that AI can be used on one side of the business and help other parts of the business. So if you split off a Chrome or a hardware business, that is going to hurt that overall AI proposition.
And at the same time, a lot of people are looking to the Apple fallout here, where I think a fifth of their services revenue comes from this Google, this $10 billion or whatever the annual payment is, which seems like one of the first places that regulators might say, that has to go away.
Yep, and I think it was interesting when that ruling first came out in favor of the DOJ, you actually saw Apple get hit harder than Google because of the threat of that payment going away. From the people I talked to, I think there's some skepticism that Apple won't get paid somehow, that Microsoft could come in and spend billions of dollars there. But also, I think there's skepticism that maybe that will be it. Some of the antitrust regulators, previous and current, are saying that stopping those kinds of payments wouldn't actually fix the problem. You need to do something more that's going to amount to more than just a slap on the wrist, like breaking up Google. So it feels like the market's shifting, and that's maybe why you see Alphabet shares massively underperforming today, now down 3%, when I think the rest of the mega caps are higher in the session. This idea that this is likely going to hurt Google most because the government wants to see real remedies here.
All right. And as we get more details, we'll continue to cover that. Deirdre, thanks for now. We appreciate it. Deirdre Bosa.